Hi there. I was looking at this business, Under Armour, to see if it's undervalued. Maybe I can more than double my money, as the market cap is about 3 billion and the PE ratio about 14. Maybe this business can grow more in the future. Because if you look at the stock price in the last month, it has increased by 8%. But of course, if you look at this highest decline from its highest peak, for instance, in 2021, the stock price was over $26. And then it has declined to $7, a decline over 73%. So when I saw this massive decline, I thought maybe Under Armour is quite undervalued at the current level, as the stock price is about $7. If you look at the past, you can see that this business had many ups and downs. The stock price was almost or over $50 in 2015. Then it went down to $11, then up to $20, then down and again up to $24. So as you can see, this business has many ups and downs. And maybe this business will rebound again from $7 to $20 or even more. So let's look at the fundamentals and see why the stock price has declined so much, especially in the last 2 years, from $25 to $7. Let's see the fundamentals, the latest results. As you can see, they reported their results for 2024 full year. They also announced some buybacks of about 500 million, and this is good if you look at the market cap of only 3 billion and their buybacks around 500 million. This is a nice return to have. If the stock price stays around this level, $7, the market cap to be around 3 billion, then your return can be about 16% only from buybacks, and this is nice. Now let's look at their results. So they report the results for the fourth quarter and also for the full year. So let's look at the table. You can see in this image the revenue for 2024 and 2023. You can see that their net revenue has declined from 5.9 billion to 5.7 billion. So this is the first thing, why the stock price has started to decline. Then let's look at net income. As you can see, their net income has declined from 374 million for 2023, as you can see here, to 242 million in 2024, as you can see here. So this is the second thing, why the stock price has declined so much. Their revenue, their growth rate went down, their revenue has started to decline, and also their net income. And that's why the stock price has declined so much. Moreover, this is not all. If you look at their future outlook, their guidance, let me show you. You can see here, fiscal 2025 outlook. And as you can see down here, revenue is expected to be down at a low double-digit percentage rate. This includes an expected 15 to 17% decline in North America, as the company works to reset their business. So they expect another decline in their revenue, especially in North America, of over or between 15 and 17%. And this is quite bad. Another trigger why the stock price has declined so much. Plus, a low single-digit percentage decline in its international business due to macro consumer trends. So the revenue is expected to continue to decline even more. Now, we also have to look at their segments because they have more segments: North America, international, and wholesale. So as they expect a decline of 15 to 17% in this segment, North America, you have to look at that segment, what percentage represents of the total revenue. So let's look at their segments. You can see here, net revenue by segment for the full year, right? And you can see that the total net revenue is 5.7 billion for 2024, and North America is their largest segment with 3.5 billion in revenue. Then Europe Middle East and Africa, Asia Pacific, Latin America, and corporate, of course. So their largest segment is North America, and they expect for the next year, 2025, another decline of 15 or 16 to 17%. So that decline for 2025 would be higher than the current decline of 8.3%, as you can see here. From 2023 to 2024, their net revenue for North America has declined by 8.3%. And the other segments has increased. 9% for Europe, Middle East and Africa, 5% for Asia, and 7.6% for Latin America. But as they said, for international, next year 2025, they also expect a decline in their revenue. So 2025 will be a bad year for Under Armour. The revenue is expected to decline even more, from 5.7 billion to less than that. It depends on many things. The decline might be even higher than 17% for North America. It might be 20%. And that's why the stock price has declined so much. Over 70%. Now you have to see if this is in the short term because of macroeconomic trends, such as high interest rates. As you can see, they went up a lot. People no longer have a lot of money to spend on other brands, such as Under Armour, and they might buy less, or other products, cheaper products, or unknown brands. So, as you can see, a decline for this year, 2024, and another decline, which is expected in 2025. And that's why the stock price went down. So, you have to look at this business if they can rebound. Let's say 2025 will be another bad year, but maybe 2026 or 2027 will be a great year. They can increase their revenue from 5 billion to 6 billion, and also their earnings. They might increase from 232 million to over 300 million or 400 million. That can also happen. If you look at their past performance, their numbers, as you can see, the revenue for 2024 was 5.7, 2023 5.9, and in the past, let's say for the last 10 years, for instance, in 2014, the revenue was about 3 billion. And in the last 10 years, it has increased to 5.7 billion, almost a double. So, if Under Armour can double again its revenue, almost double, from 5 billion to 10 billion, then the stock price can rebound from the current level, and you can have a nice return. The market cap might go from 3 billion to 6 billion or 10 billion. It also depends on the growth rate. So let's come back to the numbers and let's look at net income. As I said, for 2024, the net income was about 242 million, and in 2023 was around 374 million. That was a great performance. Now, if you look at the past, especially for 2014, let's go back. The net income was about 200 million. So, in the last 10 years, they have succeeded somehow to increase their net income from 208 million to almost 400 million or 374 million. And then it has declined because of bad economic trends. As I said, higher interest rates. So, if they can increase again the net income and also the revenue, let's say from 300 million to 600 million, especially if they achieve 600 million net income, then you can have a double with this company, with this investment, Under Armour. The market cap can go to 6 billion if they can achieve that. So you also have to look at the consumers, if they really like this brand, Under Armour, their apparel, the shoes, and other accessories. So if you like this brand and you believe in this future, you might want to look at this business and see the risk for yourself, if you like it, and the upside. Maybe you can make a great investment with this company, especially if you are a consumer. You also buy the products and you also get a double for your money. But don't forget the risk. Look at the downside. If you look at the balance sheet, you can see that they're not doing that bad. They have 858 million in cash, and that's great. Plus, as we've seen, they also have profits. So this is not an unprofitable business. They have profits. If you look at their cash, as I said, 858 million. You also look at their debt, if they have some debt. And their debt is almost 600 million, 594 million. So you subtract their debt, almost 600 million, from their cash position, 800, and you are left with 250 million. So they have some money to survive if something bad happens, and also to continue that program, buybacks program, as they announced at the beginning of their report. Company announced a new 500 million share repurchase program. And this is great because if they can succeed to increase their net income and revenue more in the future, let's say to 600 million, and they also do some buybacks, as you've seen, the number of shares are about, let me show you. The number of shares are about 440 million for 2024. They have decreased from 451 million to 440 million. And this is great. If they continue to do more buybacks, then the stock price is likely to go up a lot, especially if they improve their earnings. So the outlook seems good. But you also have to look at the risk, especially the growth rate, if they can increase their revenue and earnings more in the future. So that's it for this video. And if you have other questions about this company, then let me know in the comments.